We're joined this morning by the head of mergers and acquisitions at Jones Day, New York. He's Bob Profusek. And Bob, good to see you again.
Nice to be here.
Before we talk about the larger M&A market, I want to ask you about the Sara Lee case in particular, because we were talking about it yesterday. We had the story out about how it seems like management has bungled the buyout of this company. And you say it's completely unfair.
Well, part of the criticism is, well, the stock's trading where it was 10 years ago. Well, the Dow Jones is trading where it was 10 years ago. So, the notion that somehow people aren't looking for the maximizing value and all the rest of that, I don't think is realistic. It can only be written by somebody who hasn't been in a boardroom. Directors today are trying to do the right thing and trying to do the best they can. Mm-hmm. One of the things about Sara Lee that was interesting is there was private equity interest in the summer, but it wasn't at compelling prices. So, the company's looking at, as public reports are, the company's looking at a demerger alternative, which is the thing that other companies have been looking at. So there's mergers, there's demergers, but if that's the way to maximize value, I think you should assume that's what the board's doing.
Is there something about the case with Sara Lee that we can parse from that tells us what's going on in the larger M&A market? Well,
there's going to be a lot of demerger activity. One of the things about Sara Lee is it's a multiple business company, and they don't necessarily translate well to private equity buyouts. They don't necessarily trade that well, and that's part of the problem. Maybe the best example of that recently was Fortune Brands. Pershing Square buys a piece, basically says you ought to break up the company, and lo and behold, a couple of months later, the board says, yeah, we were always thinking about that, and we're going to do that. So there was a lot of that. There was a lot of demerger in addition to merger activity going on before the financial crisis. That hit the wall like a lot of things with the financial crisis, but it's coming back. So we're also going to have a lot of demerger activity in the financial institution space, sort of the Volcker
principle. Because they're all too big.
Well, it's not size, it's risk versus non-risky business. That's the whole thing about this, is separating businesses into their more logical silos, if you will. And the Volcker principles, which not literally, but are implicit in the Dodd-Frank legislation, are going to cause a lot there.
It's interesting you say that, though, Bob, because most people that I've heard say the opposite, which is that we're going to see more merger activity in the banking sector.
Well, you're going to see mergers where it's where you're in your silo. But I don't think there's going to be a whole lot of step-out activity. One of the things about this current period, obviously, it's much more active than it was a year ago. And the macro factors are fabulous for M&A. But M&A is not fabulous. It's good, but it's not fabulous, in part because there is just an overall level of caution that still exists in the corporate boardroom, frankly, in private equity firms, and everywhere in the market. So while if you stood back from the macro factors, you'd say, gosh, this ought to be like 2006 or better.
Right, yeah.
And it's not.
But it's not.
Good, but it's not great. And I think that's because CEOs or heads of PE firms, they want to get on base, maybe even get a stand-up double, but they're not swinging for the fences.
But Bob, then in the corporate boardroom, what are the questions being asked? I mean, what are you hearing then?
Well, I'll go back to Sara Lee. I'm sure the question is always, what's the best way to maximize shareholder value? And anybody who thinks otherwise, again, I don't think has ever been in a boardroom. That's what they're doing. And if the best way is to split up the company, that's what they'll do. If the best way is to do something different, they'll do that too. Massey Energy was also a recent interesting situation in the fourth quarter. The rumors were it's buying or selling. It wasn't clear. It's joint venturing. It's doing whatever it's doing. And that just, in my view, is an indication that the board's trying to figure out all alternatives and do the best one.
Are they confused in some ways, or is the discussion more confusing?
Well, the discussions are always difficult because you're trying to say what's the current value of some future activity. In fact, that's all evaluation is,
right.
Your assessment of the present value of the future. So it's always difficult, but the idea that we're going to absolutely stay the course, we're not for sale, we're going to stay the way they are. If people thought that's the way companies acted, maybe they did a little bit in the 60s and 70s or 80s even, that's gone.
Okay.
And so it's, should we sell, should we buy, should we combine, should we JV, what should we do? All alternatives are on the table.
All options on the table.
That's right.
Bob, appreciate it. Good to see you again.
Thank you.
Bob Profusek, the head of M&A at Jones Day, New York, talking about mergers.